Introduction.
This research study digs into the diverse world of monetary policy, attempting to provide a full grasp of central bank tactics, transmission mechanisms, and the deep ramifications for business operations.
Objectives of the study.
The main objective of this study is to understand monetary policy holistically. This study specifically aimed to respond to the following. 1. What are the strategies and transmission mechanisms of the central bank? And number 2. What are the effects of monetary policy to business operations in the Philippines?
Methodology.
The researchers utilized Google Scholar, ResearchGate, Academia.edu, PSU.edu, Archive.org, and other sources to support the research study. Consequently, a total of 23 most relevant search results were reviewed and taken into consideration. Preferred reporting items for systematic reviews and meta-analysis, or PRISMA, as shown on the screen, was used in conducting this research. The keywords used in search were monetary policy, transmission mechanism, impact of monetary policy in the Philippines, and transmission mechanisms of monetary policy in the Philippines.
Results and discussion.
Monetary policy is one of two primary means by which government authorities in a market economy regularly influence the pace and direction of overall economic activity, which includes not only aggregate output and employment levels but also the general rate at which prices rise or fall. Central banks' ability to implement monetary policy stems from their monopoly position as suppliers of their own liabilities, which banks then require either as legally required reserves or as balances for settling interbank claims in order to create the money and credit used in everyday economic transactions. When considering monetary policy transmission, there are two crucial factors to consider. The first is the transmission of information from instruments directly under the control of the central bank, for example, short-term interest rates or reserve requirements, to variables that have most direct impact on non-financial sector conditions such as loan rates, deposit rates, asset prices, and currency rates. The second is the relationship between financial conditions and spending decisions by both consumers and businesses. The Bangko Sentral ng Pilipinas (BSP) implements numerous tactics and transmission channels to conduct monetary policy and achieve its objectives. Monetary policy in the Philippines can affect real economic activities and inflation through a variety of avenues, including market interest rates and currency rates. The key components of this mechanism include the monetary policy framework, economic and financial developments, and inflation targeting. The Bangko Sentral ng Pilipinas or BSP is the central bank of the Philippines, and its primary objective is to promote a low and stable inflation conducive to a balanced and sustainable economic growth. The BSP's monetary policy strategies include the Monetary Policy Report or the MPR. Launched in February 2022, the MPR replaces the quarterly publication of the inflation report and serves as the flagship BSP document providing detailed forecasts and guidance on the likely monetary policy stance. Next is the monetary policy meetings to determine the proper monetary policy stance for the BSP to maintain inflation within a target range. The Monetary Board convenes 8 times a year to deliberate and discuss and make decisions. Monetary operations, the BSP uses its two monetary instruments such as reserve repurchase or RRP facility and to influence underlying demand and supply in the financial market and the economy. Number 3, interest rates. The RRP interest rate serves as the policy rate of the BSP, and the overnight RRP is offered using a fixed rate and full allotment method. Next is the exit strategy. The BSP will withdraw monetary support only when there are indisputable signs of economic recovery amid a manageable inflation environment. Lastly is the digitalization and financial inclusion. The BSP is working on implementing a well-calibrated exit strategy that is consistent with its price and financial stability objectives while also focusing on the digitalization and financial inclusion. In the Philippines, the Bangko Sentral ng Pilipinas or BSP is in charge of implementing monetary policy. The BSP has transferred its monetary operations to tools such as reserve requirements, a special deposit facility for banks, and paperless open market transactions. Through expectations and self-fulfilling aspect of inflation, monetary policy has a significant additional impact on inflation. A lot of pay and pricing agreements are predetermined using inflation estimates. Interest rate hikes combined with announcements of impending increases could persuade the public that policy is aimed to limiting inflation. Then, over time, a long-term contracts will gradually incorporate more moderate price and salary increases, keeping actual inflation low.
Conclusion.
Monetary policy is the process by which a central bank or government manages the supply and interest rate to influence the economy. When considering monetary policy transmission, there are two crucial factors to consider. The first is transmission of information from instruments directly under the control of the central bank to variables that have the most direct impact on non-financial sector conditions. The second is the relationship between the financial conditions and spending decisions by both consumers and businesses. In the Philippines, the Bangko Sentral ng Pilipinas is primarily required by legislation to maintain price stability in order to promote balanced and long-term economic growth. As a result, price stability is viewed as an essential complement rather than an alternative to economic progress. Price stability refers to either stable overall price level or a low and stable inflation rate. Monetary policy has a wide-ranging and intricate effect on business activities in the Philippines. The BSP uses interest rates as a tool to control inflation and economic activity, which is one of its main tactics. The central bank seeks to sustain price stability and foster an atmosphere that is favorable for economic growth and modifying policy rates. The transmission mechanisms are crucial in disseminating the impacts of monetary policy across the economy. Overall, domestic and global economic factors influence the effectiveness and impact of monetary policy on company operations in the Philippines. I am your researcher, Mary Grace Losbanes.